Hello, everyone, and welcome back to another episode of Fundraising Today and the Go Beyond Fundraising podcast. We've got a great guest today, Steve Latham, the co founder and CEO of Donate Stock. Steve, welcome to the show.
Thank you. Thanks for having me.
And then we also have Don Galasso back with us today. Don, glad to see you back here again.
Thanks. I'm glad to join.
We've got a great topic today, which is stock donations. We had a conversation about non cash giving about a year ago. And back then, the stock market was in a much different place than it is today. And we thought it would be worth it to have this conversation again, especially because some things have changed in the stock market. And we are coming up, as we're recording today, on the year end giving season. And our friend Steve has a lot of stats that are really eye opening to share about some of the untapped potential that could lie in your donor file. And so, Don, why don't you kick us off today with getting us into this conversation and getting into some background about why this is such an important topic?
Yeah, thanks, Lee. I appreciate it. Steve's great to talk to you again. Super excited to have a conversation around why we need to focus on stock donations as nonprofits. So if you can start by explaining why it's so important for nonprofits to have the ability to accept stock donations, especially at the end of the year, and what motivated you to co-found Donate Stock to facilitate this process?
Yeah, I'll start with the latter because that's an easier story. So 15 years ago, a friend of mine told me, a financial advisor, about the benefits of stock gifting. And we can get into the particulars as we get into this, but it sounded such a good deal that I thought, wow, that sounds awesome. I own some stock. I'd like to give some of the scholarship fund that had given me a scholarship in school. And then I discovered why very few people donate stock. I went through the process manually of doing the research, calling the nonprofit, being directed back to my broker, being directed back to the nonprofit. It was calls, forms, emails, printing, signing, having to drop off a form. It literally took almost a week to get a small stock gift done. And it was such a hassle. It wasn't worth doing it anymore. And then that was in 2008 and 2020. My last company, I'd spent the last 18 years in advertising and marketing technology. My last company was going through a final kind of sale and exit event. And I was thinking about what I wanted to do next. And this had always been in the back of my mind that if no one solves this problem, and that would be a really fun one to tackle. So we started Donate Stock, first of all, to make it easy for donors. That was the first focus on it, not really understanding what happened behind the scenes, which is a whole different set of issues. But that was really it. It was something that I thought, wow, if we could make it easy, then and remove the friction, we could unlock billions of funding for nonprofits. And that was the original idea. Why stock is so important to your first question is really a few reasons. One is it's the most tax advantage way for donors to support your cause. We can, again, talk about the benefits of stock gifting, but it's if donors can make a pre-tax gift to you, it tends to be much larger. Average stock gift that we process over the last 2.5 years now is about between $5,000 and $6,000. So they're larger gifts. They are more tax advantage for the donors. And instead of paying taxes on it, they could actually give the nonprofit the money that would have gone to the IRS. You're not leaving money on the table like you are when you ask for an after-tax gift, like credit or cash or direct debit. So this is a way for larger pre-tax gifts to flow from where household wealth is concentrated. It's not checking accounts or credit card availability. It's their brokerage accounts. And if you can allow them to share their wealth with you and invest in you, it's a very different conversation than, can you give us $500 on your credit card? Knowing they're going to pay that bill next month. Most people that are donating stock are larger givers, donors, major give donors, whatever you want to call them, but they've been in the markets on average 10, 15, 20 years. They have massive gains. And for them to know that, one, they can share those gains with you, two, that it's more tax advantage, and three, it's easy. That's really why now more than in the past, it makes a lot of sense for nonprofits to lean into it.
Yeah, and you had mentioned the stat when we were talking before around the percentage of cash available, stock available versus. So can you go and expand on that percentage that you provided to me earlier?
If I could share my screen with you, I'll show you a couple slides that might help. And for those listening to this, I'll explain what we're looking at. The first chart over here is really looking at where household wealth is concentrated. These numbers are actually need to be updated. It's now more like 90%, 10%. That 90% of household wealth is in their investment accounts. It's in their brokerages, not their bank account. and uniquely advantaged for the donors. We've looked at it that if you think about the average, there's about 50 million active investors. The top 10% have portfolios in the millions of dollars. For them to give a $10,000 gift, a stock gift is really, it's a rounding error on their daily portfolio movement. If they have a $2 million portfolio, that's a 0.5% movement every day, which happens all the time. So it's really easy for them to give 10,000. That's worth 50 billion of potential funding. I think 5 million people, $10,000 in annual giving, where they have millions of dollars, generally speaking, your major gift donors. And that's the top 10%. If you think about the other 90% of donors out there that are people that own stock, the other 40 plus million people, they're worth probably another 25 to 50 billion a year. So there's 75 to 100 billion in potential funding for nonprofits. Today, most nonprofits don't solicit a whole lot of stock gifts. They tend to take them when someone says, I really want to give you stock. Can you please accommodate it? And okay, we'll do that for you because you're special. But it's really such a big opportunity because it shouldn't be 1% of your giving proceeds. And that's typically what we see. Most nonprofits that can receive stock gifts, they might get 0.1, 0.2% of their gifts, but their larger gifts, maybe 5 to 10,000 each on average, sometimes larger, depending on how many they get. And then that's 1% of the proceeds. But think about half of their donors own stock and probably 90+% of their major gift donors own stock. So it could be a much larger component of their fundraising program. A great example is we have a case study with World Central Kitchen who signed up with us in December 22. In the first year in 2023, stock went from 1.3% of proceeds, kind of industry average, up to almost 9%. And it grew on an actual absolute basis, 15-fold in 1 year. So 1,500% increase in stock giving, increased from over 1% to almost 9% of proceeds. And that resulted in significant growth and diversification for them. And in this market, this climate where inflation is persistent, cost of living is higher, there's less cash left over for discretionary spending or investments. And that's why I think there's a lot of people are feeling fairly cash tight. But if you look at where the market is, more only a few percent away from all-time high, all the most widely held largest stocks, think of Google, Amazon, Tesla, Netflix, what are the Magnificent Seven? NVIDIA, Microsoft. I think that's it. There's maybe one more. Oh, and Meta, Facebook. They're at or near all-time highs. So people who've been in these stocks for 5, 10 plus years are sitting on massive gains. They might be feeling a little tight about the checkbook, but they have tons of capital in their brokerage account. So that's the opportunity. And we think it's worth tens of billions a year in incremental funding, which would more than offset this contraction in funding giving that we saw in 22 and are probably looking at in 23 as well.
Yeah, that's great. Yeah, those stats are mind blowing. And you're absolutely right about the idea that the reason why 2022 was off year and 2023 probably is going to be that contraction is because people are feeling like they don't have the same amount of cash in their pocketbook. And so by looking at alternatives like stock and identifying those individuals who would be willing to give, that's amazing. So one of the key benefits you mentioned is the ability for the donor to offset capital gains taxes when they donate stock. And I think you might even want to share that same screen that you had because
Yeah.
I think you have a description of why that is. So can you unpack this a little bit more so that the listeners understand how it works and why it's actually a win for both the donor and the nonprofit?
Absolutely. And this is the thing that when I heard about this in 2008, a light bulb went off. I was like, wow, that sounds too good to be true. And what is it exactly? So if you think about a situation, we hear these stories where a nonprofit has a donor reaches out and says, hey, I've made some money on an investment. I'd like to donate my gains to you. And great. It calls the broker. They sell the stock, deduct the tax, and send the cash over. So that's bad for the donor. It's bad for the nonprofit. Now, let's assume that someone wants to give you a $10,000 gift. If you bought Apple 5 years ago, it's up about 5x on average. So let's say you paid $2,000 for Apple stock 5 years ago in 2018. Today, it's up about 5x from that. So that 2,000 investment is worth 10,000. If you sell that stock, you're going to pay a capital gains tax of around $2,000, depending on where you live. So this is pointing to the tax savings. So it's going to vary based on the state they live in, but capital gains can be anywhere from all in 18.8 up to like high 30s%, depending on what state the person's in. And so let's assume it's 25% of an $8,000 gain. That's a $2,000 capital gain tax they're going to pay. And then they can only deduct the 8,000 deduction. So I had 10K, I sold it, I paid 2,000 taxes. My broker sends you $8,000 and I can deduct or itemize that 8,000. Now, if I donate the stock instead of the cash, I don't pay the capital gains tax. My stock goes from me to you or to a 501c3 processing the stock for you. You get $10,000 as a nonprofit. I don't have to pay the capital gains tax. You're tax exempt, so you don't have to. And now I get to write off the full $10,000 donation as well. So not only am I saving $2,000 on the capital gains tax, I'm also getting another probably $500 incremental tax savings, cash savings on itemizing a larger donation. So it's a much more tax efficient way for donors to give. It's historically, most people don't know this. I jokingly say it's the best kept secret in personal finance is stock gifting. This has been a tool of the 1% households for decades. And so now it's really time to democratize it. And the beauty is everybody can get the same relative savings. You don't have to be Elon Musk to get the same really unique tax savings by donating stock instead of cash.
That's astounding. As we wrap up, I would be really interested. You talked about World Central Kitchen and the success that they've had. Can you give us a little bit of insight of the things that they changed in working with you that helped with that success?
Yeah,
Yeah.
2 words, an easy button. That's an easy button for doing stock gifting. Think of us as PayPal for stock gifting. So what used to be a painstaking, laborious process now for the first gift takes maybe 5 minutes. Subsequent gifts take 60 seconds. You log in, you said, I want to give my 10 shares of Apple, another 5 shares of NVIDIA to this cause, and you can sprinkle it around or concentrate it. Make it easy, I think is really the key there in removing that friction. And it's a fun thing to do. It's the epitome of generosity. It's like, I have invested well, I've earned returns. I'm going to share my winnings, my gains with the causes I care about. And if you make that easy for me, I'll do that a lot. And that's where we find 20% of our donors now have made on average 3.5 gifts. So it's a high recurring transaction. We're seeing now people coming back in this Q4 start making their stock gifts again. We're starting to see old names reappear. And it's because people, I think at the end of the day, people are rational, logical. If you make it easy for them to support you in the ways they can and the ways that are most advantageous, you're going to see, great results. We have speaking of other nonprofits, I was thinking about a couple down in Florida, one called Chapman Partnership. They signed up and it was last ditch, like early December. They sent an email out to all their donors saying, hey, by the way, we could take stock gifts. And they had 6 figures in gifts within a week. It was people like, wow, we didn't know you did. They never had before. And I've got a lot of stock, especially people who are on fixed income and may not have a lot of cash, but they do have their portfolios that they have to get rid of at some point. And that's an example. Another one called Put Stock in Children. That's another one, which I really like their name is like Put Stock or Take Stock in Kids, something like that. And they did the same thing. 5-figure gifts came in by letting their donors know. And these are the ones I hear about personally because the people I know reach out, but it's not a big leap. So it's about making it easy. I think that's what World Central Kitchen found. Make it easy and be responsive quickly. That's the key to making people comfortable with their stock gifting and making recurring gifts.
And I think there's one other thing you said that's important that in addition to that, and that is let people know you accept stock gifts, because a lot of times your stock, if you are accepting stock, even in the traditional way, it's below the fold is the way I like to say it. So they don't find it on your website. It doesn't become easy to find. So if to your point, those nonprofits that you said at the end of last year ended up with large, decent stock gifts at the end of the year, it was because they said, hey, we take stock, right? Otherwise, they wouldn't have given in that way. So I think that's the third point that we'll wrap up with this is that make it easy. I can't remember what the other one was and let people know.
That's key. I'm glad you said that because I would have regretted if that point had not been brought in because that's so important. You can't expect people to dig through your site and find, how do I do this? You need to put it prominent on there. Hey, you can now give us a lot of different ways. Give from your DAF, give from stock. If you want to give crypto, if you're that group, great. Give it whatever non-cash assets you have, in addition to credit card, PayPal, direct debit, et cetera. I think but they got to be proactive. I think that was the point you raised. They can't wait for people to come looking for it. But if you're proactive, the early bird gets a lot of worms in this environment we're in.
Yeah, that's great. Thank you so much, Steve. This has been great. I've learned a lot today. It's been a pleasure to have this conversation with you.
Thanks for having me. Really appreciate you all and happy to do this anytime.